The number one mistake beginner investors make is that they don't analyze the companies that they invest in. They simply buy a stock because they think it's a good investment. Not all stocks is a good investment, and you can really burn your fingers if you don't take the right steps to make sure that you are investing in a quality company. A couple of months ago, or basically around a year ago, I made a video about investing in Visa. Visa is a company that acts as a middleman in the world of electronic payments. They don't directly issue cards or charge interest, but instead facilitate transactions between banks and businesses, and Visa makes money by charging fees for processing transaction data, providing various services like fraud management and data analysis, and handling international transactions. They are essentially a network that keeps everything running smoothly for digital payments. In my opinion, Visa has a strong competitive moat or a strong competitive advantage, and currently I do own Visa shares. Although I'm sharing this information with you, it is not financial advice, and I'm basically just sharing what I do when I invest in companies and what I look for. In this video, I'm going to show you guys the platform that I use to run the numbers and to analyze companies like Visa to determine whether it's a good investment or not. Traditionally, you would go ahead and download the latest annual report or a quarter report for the company that you want to analyze, and it would look something like this. This is Visa's 2024 first quarter results, and like you can see, there's a lot of information in this document, and the reason I'm showing you this is because traditionally you will run through this report and try to identify whether the company has created positive growth over the last couple of quarters. Something that I always look for is free cash flow. Free cash flow is basically the cash a company has left over after accounting for money it needs to run its day-to-day operations and keep its physical assets in good shape. It's a key measure of a company's financial health. It considers a company's cash flow from operations, but subtracts out money spent on equipment and other stuff, which is called capital expenditure. Unlike net income, it excludes non-cash expenses and focus on actual cash movement. Think of it as cash a company can freely use for things like paying back debt, giving dividends to shareholders, as well as funding new projects. And investors and analysts use free cash flow to judge a company's ability to generate cash and its financial flexibility. Traditionally, you will have to search for the cash flow statement on this report, and we will have to search for net cash provided by operating activities, and this is the cash the company creates by its operations. And in order for us to get to free cash flow, we have to deduct the purchases of property, equipment and technology, otherwise known as capital expenditure. So I will literally have to go and type in the information on my calculator. So I will have to use the net cash provided by operating activities of $3.614 billion and deduct the capital expenditures of $267 million, and we'll get to $3.347 billion of free cash flow. Instead of doing this, I started using a platform called Mega Charts. And the reason I use Mega Charts is because it has so many functions and easy ways to run through the numbers to make your life much easier. Like we can see, I have Visa in front of me, and we can see the chart. We can change it from yearly to year to date, 5 years, or the maximum amount. We can see details like its market cap, its current PE ratio, 52-week highs and 52-week lows. The cool thing about this platform is that it shares key performance indicators, and this is the stuff that I want to show you. Instead of doing the manual calculations, I will simply scroll down to the operating expenses tab and click on free cash flow. And on the latest quarter, let me just zoom in. On the latest quarter, we can see that it had free cash flow of $3.35 billion. Like we worked out here, it's 3.347. Rounded up, it's $3.35 billion. Just check how easy it is to determine what the free cash flow is of this company. It shares key performance indicators of each and every company that you want to invest in. And it has stuff like revenue growth. Here we can see that over the last year, Visa's revenue growth was double digits at 11.4%, which in my opinion is really decent growth. The coolest thing that I want to show you, and the reason why I invest in Visa and why I say that they have a competitive advantage, is because let's have a look at their gross margins. Gross profit is your revenue minus the cost of the goods sold, and in Visa's case they have a very high gross margin, and like we can see here in the latest quarter it had a gross margin of a massive 80%. And the reason I like investing in Visa is because over the last couple of years, or basically the last decade, Visa has a stable gross margin of above 80%. This is a great competitive company because they can keep a large portion of the money that they generate. If I, for example, select a company like Amazon, we can see that the gross margins is all over the place, and its latest year's margin is only 13%. So again, Visa has a gross margin of 80%, whereas a company like Amazon has a gross margin of 13%. And again, just look how easy it is to process this information. We can also click on the operating option, which gives us the operating margin. And Visa has a massive operating margin of almost 70% in the latest quarter. And again, we can go ahead and add free cash flow. So it has a massive free cash flow margin of almost 40% in the latest quarter. We can change from quarterly to yearly. And if we scroll down, it also has information like revenue per share and price to earnings ratio. What I want to show you here is that in the latest year, Visa has a PE ratio, or a price to earnings ratio, of 27.5%. And if I scroll back, here we can see that Visa is trading at the same PE ratio today as in 2015, but in today's time it's generating 60% free cash flow in a year. Another thing you can look at is debt to equity ratios, which is your total debt divided by total assets and minus its total liabilities. MegaCharts makes this whole investing journey much easier because we can scan through all the relevant information and process it much quicker than running through an actual annual report. One of the coolest parts of MegaCharts is that it has unique key performance indicators. And this is based specifically on the company that you select. And like I mentioned, Visa makes money through payment volumes as well as the number of transactions processed. This is a great way to see if the core business that you are investing in is actually growing. And if I scroll back on this total payment volume, we can see that Visa has been growing its total payment volume year over year, and it's currently processing a payment volume of $15 trillion. And that's why I like investing in Visa, because they can generate all this payment volume and they only have to charge a small fee per transaction to create a large revenue stream. We can see the number of transactions processed year over year has also been growing, and it's currently processing 212.6 billion transactions each and every year, which is insane. Then lastly, the services revenue from Visa has also been growing steadily, and it is currently at $13.4 billion. If you bought Visa the day I made my first Visa video, which was around a year ago, your stock would be up more than 30%, and that's thanks to using platforms like MegaCharts. So if you are interested to sign up with MegaCharts, you can use my affiliate link of Louis Invest to get a massive 10% discount on the platform, and you can also learn to make good investment decisions and grow your overall net worth using tools and platforms that makes life much easier.